Hello and welcome to Portfolio Matters. Regular viewers will know that we have covered the developing EU energy crisis in some depth, and on our Discord channel we have been discussing the investment implications of the energy crisis, and I'm just going to do a short piece in which I cover briefly the best ideas. Now, I'm just going to quickly mention them and not go into any of them in depth. So this is an overview. If any of these attract your interest, please do your own research. And on that note, I'll quickly read the disclaimer. Everything discussed during the Portfolio Matters podcast is for informational purposes only and should not be considered as investment advice. Listeners should be aware that we will be discussing securities that we own or have a financial interest in. Please do your own research or consult a professional investment advisor before making any decisions regarding topics mentioned on the show. Full disclaimer can be found at the end. Okay, first of all, when thinking about the investment implications of the EU energy crisis, I'm reminded of the Cantillon Effect. The impact of any disruption can be thought of just like a champagne pyramid. So as you pour champagne from the top glass, the glasses immediately below it get most of the champagne, and then it trickles down. And so the same happens with money flows. So when the central bank or government spend money, the initial recipients of that money gain the most benefit, and then when they spend it, the effects trickle out through the economy. Now, the same process occurs when you think about any disruption. So thinking about the EU energy crisis, the main beneficiaries or losers will be the companies that either provide electricity or natural gas, and the main losers will be consumers of natural gas. And so we will concentrate just on the companies we think are going to benefit most from the energy crisis. Okay, so a brief recap. Earlier in the year, Dutch natural gas futures were trading below 20 euros, and they recently hit a peak of 180, although they have come off in recent days on the back of LNG cargoes arriving from the US and reduced Christmas demand. So all industries offline, and we have had some extra supply from LNG, but that is not a long-term solution. The only reason we're getting LNG supplies is that we're outbidding Asia. We still have a structural supply problem in Europe, and we're not investing in natural gas, and we are transitioning to renewables, turning off our nuclear power stations, and when the wind doesn't blow, we need to burn a lot of gas. So expect this crisis to continue, i.e. prices not to be at the extraordinarily elevated levels they have been in recent weeks, but still to be structurally higher than they have been in previous years or decades. This is the UK natural gas future, and this is UK electricity prices. And you'll see from earlier in the year, they were trading about £50, and now they're about 308, having hit 550. So even well down from their peak, they're still up sixfold on the year. Okay, so who are going to be the winners? Well, the main winners will be EU and UK natural gas producers. So this is a natural gas crisis, essentially, because this is electricity generation, and the backup base load is natural gas. And as Russia have reduced their supplies to Europe, so we are short natural gas, and that feeds through to very high natural gas and electricity prices. Other beneficiaries will be European electricity producers who are able to respond to high day rates. Now, most electricity producers are on long-term contracts, so they don't benefit from elevated day rates. And we don't have any ideas of which companies would be benefiting from very high day rates. If any viewers have an idea, please leave us a message or log on to our Discord channel and share your ideas. LNG exporters, and we'll go through some of those. Now, the losers will be European producers of basic materials which are very electricity intensive, such as aluminium, magnesium, or steel. And we will go through some companies that have cheap renewable energy and so will benefit as European high-cost producers of aluminium and steel have to curtail production because of high costs. And finally, 1 year ahead food prices. Now, fertilizers, aluminium nitrate, are produced by the Haber-Bosch process, which is a vast consumer of natural gas. And as natural gas prices have risen, so various European fertilizer producers have had to curtail production. And that means fertilizer prices have gone up. Farmers have reduced their usage of fertilizer, and you'd expect that 1 year hence, that will show up in reduced crop yields. So we could have higher food prices 1 year hence. Now, who will be the losers? Well, the losers will be energy intensive industries that are exposed to these very high European energy costs, such as European fertilizer manufacturers, and we've seen various of those close temporarily, and aluminium, magnesium, and steel producers. Also, UK and European utilities, will they be able to fully pass on the rises in power prices? And if they do, they're likely to experience a rise in bad debts, so they're likely to see their margins squeezed. Okay, so we're only going to talk about winners. So these are companies that our Discord community thought could benefit from rising European energy prices. So first of all, European gas producers. Harbour Energy is a UK oil and gas company which produces about 200,000 barrels of oil equivalent per day. About 50% is gas, and you will see that its share price really hasn't moved much over the course of the last year, despite very elevated oil and gas prices. It is heavily indebted, and it only listed about a year ago, having been a reverse merger between Crisio, which is a private equity owned oil company, and Premier Oil, which was a highly indebted listed one. Equinor is an enormous Norwegian oil and gas company which produces over 2 million barrels of oil equivalent per day and has been expanding into renewables. And it was one of the few companies that have increased their gas production into this crisis, so they should be doing quite well. Serica Energy produce about 5% of the UK's natural gas, and their 2022 guidance is that they'll produce about 30,000 barrels of oil equivalent per day, 80% of it gas. Their Columbus field has just come online, but is not able to produce fully because the export pipeline they're using is currently full, but that is expected to ease in Q1 2022. But the share price has done very well recently. Independent oil and gas have some gas exploration and development fields, and they are due to start producing gas from their first two fields, that's Blythe and Elwood fields in the southern North Sea, in Q1 2022. The fields have already been developed, but they need to refurbish the Bacton gas import station on the east coast of England before they can actually bring the gas onshore. Okay, then LNG exporters. So currently there's an enormous gap between gas prices in the USA and gas prices in Europe. So this is a chart from last week, and obviously European gas prices have come down since then, but last week European gas prices were 13.7 times American ones. So if you can arbitrage that gap by liquefying US natural gas and exporting it to Europe, that is a tremendous arbitrage opportunity. Okay, so LNG producers. Well, of the majors, Royal Dutch Shell has the largest proportion of gas in its portfolio, and its share price is well down on its pre-COVID highs. Cheniere Energy is a US LNG exporter. Now, 85% of its production is on long-term contracts, and 15% is available at market. But as those long-term contracts roll off, you would expect them to be reset at higher prices. Thank you to Simon W. from our Discord for recommending that. Now, if that's a bit high risk, then their related company, Cheniere Energy Partners, owns the liquefaction trains from which it derives a steady income. So this is an income play, and it currently yields around 6.4%. Thank you again to Simon W. for that. And another Simon W. recommendation is the Australian oil and gas company Woodside Petroleum, who have LNG assets in Australia, and they are in the process of acquiring BHP's oil and gas assets. And if you look at the share price, well down on pre-COVID levels. Okay, aluminium producers. So aluminium is essentially congealed electricity, and as electricity prices rise, then so the cost of aluminium will rise. Now, we know that China has been increasing its electricity prices by, I believe, 20% this year. So their costs are rising. In Europe, aluminium producers have had to temporarily close production due to high energy costs. So all that means reduced supply or higher cost aluminium, and aluminium producers which use cheap renewable energy, either hydro or geothermal, will not suffer from rising energy costs, and so therefore they should benefit. Okay, so thank you first of all to Jim Thorhorger, he says, I apologize if I've mispronounced your name, who sent us this recommendation. I think this is the best aluminium group to benefit, and it's a Russian group, EN Plus Group, which has a listing in London and in Moscow, and it is the largest aluminium producer outside China, and it's the lowest cost aluminium producer in the world. It's got 100% hydroelectric power from its dams in Siberia, but it is, of course, Russian. So there's jurisdiction risks and political risks. This is Chalco, which is a Chinese company listed in Hong Kong. It's the world's third largest alumina producer and the world's second largest primary aluminium producer. Thank you to Simon W. for that recommendation, and also to him for his recommendation of Hongkou Group, which is the world's largest aluminium producer, also listed in Hong Kong. It has annual production of 6 million tons. Now, a reminder that Goldman Sachs are forecasting that the aluminium market will move from a surplus to a deficit in the next few years. And that was before the energy crisis in Europe. This is Norsk Hydro, which is a Norwegian company and has cheap hydroelectricity. Thank you again to Simon W. And Alcoa, which is a well-diversified global aluminium producer listed in the US. It has a diversity of assets, but it has some assets in Canada, which are powered by cheap hydro, and operations in Iceland, which have cheap geothermal. And finally, fertilizer, ammonium nitrate fertilizer, is produced via the Haber-Bosch process, which uses vast quantities of natural gas, and so it's basically become uneconomic to produce it in Europe. And we had a recommendation for this company from Discord member Richard Wilk, and this is a Chilean fertilizer and lithium producer, Sociedad Química y Minera, which is actually listed in the US, and they have some potassium nitrate production, and that will not be affected by the European energy crisis. And that's it. So just a quick run through of investment ideas that have been recommended by our Discord members for companies that will benefit from the European energy crisis. If you have any ideas of your own, we would love to hear them. Please can you either leave them in the comments section or join our Discord. In the meantime, please can you press like and subscribe to the channel, and it's goodbye from me, Keith Jordan. Goodbye.
Full disclaimer. The material and information contained in this podcast is for information and entertainment purposes only, and should not be relied upon for making a business, legal, or any other decision. We may own or have a financial interest in any securities mentioned. Listeners should conduct their own research or consult a professional investment advisor before making any decisions regarding topics mentioned on the show. Whilst we endeavour to ensure that the information presented on the show is correct, we make no representations or warranties of any kind, express or implied, with respect to the podcast and website, or to any information, products, services, or related graphics discussed or presented in the podcast or website. Any reliance you place on such material is strictly at your own risk. You are solely responsible for the investment decisions you make. We will not be responsible for any errors or omissions in the podcast or website, including in articles or postings, for hyperlinks embedded in messages, or for any results obtained from the use of such information, nor will we be liable for any loss or damage, including consequential damages, if any, caused by a reader's reliance on any information provided by the podcast or website. Please do not listen to the podcast if you do not accept self-responsibility for your actions.